good morning, good afternoon, good evening, wherever you are in the world. It's a pleasure to be here hosting this webinar, or at least moderating this webinar with our hosts, the Global Plastic Action Partnership and a program of the World Economic Forum and the Circulate Initiative, two organizations that are paving the way for investors in the circular economy space. The webinar today, as you can see on the slide here, is about charting the investment opportunity in plastic circularity. And I'm thrilled to be here to engage in this timely and very relevant discussion with a panel of true experts to dive into this topic as we go. But before we begin, I'd like to just set us up with what we know. We know that facilitating the transition to a circular economy can help fight plastic pollution and also mitigate climate change. We know that we need system change that combines both upstream and downstream solutions to make this a reality. We also know that estimates suggest that more than $1 trillion are needed to create a circular economy for plastics to reach a necessary scale of infrastructure. And at the same time, this investment could generate many more multiples of trillions of dollars of additional economic output over the next decade. One of the reasons I'm so passionate about this space is that we have the opportunity to simultaneously solve the plastic waste issue and capture economic value. It's a win-win. But what I think many of us don't know or understand is how to act on this opportunity. Our hosts today, the Circulate Initiative, in collaboration with the World Economic Forum's Global Plastic Action Partnership, published a set of case studies which demonstrates how private capital can unlock opportunities in the circular economy and the critical role policy needs to play to stimulate investor interest. Unlocking the Plastic Circular Economy Case Studies on Investment focuses on investments that can be made across the plastics value chain, showcasing examples of how capital from a variety of sources is being mobilized to create new circular business models and ensuring waste is recovered and recycled. This is a page-turner publication that highlights voluntary corporate action and thematically relevant finance mechanisms. All are setting the stage for a greater commitment of private capital to address the plastic pollution challenge and advance the circular economy. In addition, this publication notes the critical role that governments play in mobilizing private capital and how it can stimulate investor interest through policies, regulations that support a cohesive ecosystem for plastics, incentivize investment, and reduce risk. This policymaker component is especially relevant today, as we're now on the heels of the first Intergovernmental Negotiating Committee meeting for a new global plastic pollution treaty. So my name is Rob Kaplan. I'm the founder and CEO of Circulate Capital, and I'll be moderating the panel here today. And as we kick off here with that sort of stage setting, I'd like to introduce Kristen Hughes, who's director of the Global Plastic Action Partnership and member of the Executive Committee for the World Economic Forum. To help frame up our discussion today, I think Kristen just got off the plane from Punta del Este in Uruguay, where the negotiation was taking place. And so maybe we'll hear a little bit about that trip and what she learned. Kristen?
Great, thanks for that, Rob. Thanks for the introduction. Thanks also for framing this conversation so well. It's been such a delight to work with yourself at Circulate Capital, as well as Ellen at the Circulate Initiative, to pull together this series of case studies that we're here to launch today. So really appreciate the numbers explained. It's really fascinating. Like you said, I literally just returned from Punta del Este in Uruguay, where negotiators are just beginning the INC process to reach an international binding agreement on plastic pollution. And you realize throughout the conversation, there's such a need for financing. And this is not funding. This is not International Development Bank funding. This is financing. And you realize in order for us to have an end-to-end value chain transition to a circular plastics world, we absolutely need to find a way to unlock capital and financing and proper investments for many, many parts of that value chain. And I know that there's a lot of focus sometimes on downstream when we think about managing waste and increasing recycling rates and collection, sorting, etc. But what I heard last week at Uruguay was also a lot of opportunity in the upstream space as well. So innovations around reuse, refill, and new material designs as well. So there's a massive opportunity here for investments. And we believe also if we look at the challenges that were facing the renewable energy some decade ago and how quickly investors finally, I shouldn't say quickly, investors finally came to the table, but then quickly realized that there was an opportunity. So hopefully we can also see some of those trends in the case studies that we are unveiling today. So really excited to launch this second edition of the case studies and also to discuss today some of the key actors who are driving these investments. So some of the examples will include Recycle in India, Mr. Green Africa in Kenya, Tridi Oasis in Indonesia, and some reuse cases from around the world. As I mentioned before, reuse really becoming very key to some of the conversations that we're having in the space of the international treaty. These are all really targeted for a financial sector audience, but we're also trying to think about the policymaker in all of this, especially in light of the international treaty, because one of the things we're finding is that there are quite often barriers to investments. So how can we work with regulators and policymakers to start to bring to light what these inhibitors look like and actually instead incentivize investments, de-risk investments such that more traditional finance can be uncovered. So the case studies should also illustrate those specifics. So again, with negotiations well and alive, I think we'll see a lot of opportunities for us really to bring to life these, not only these case studies, but how can we bring them to scale? So working with investors, financial institutions, and others around the world. We welcome your thoughts and engagements, your questions. Rob, thank you so much for pulling us together today. And I'm really excited to hear what the real work has carved out in front of us. And I'm excited to hear from the examples in today's session. Thank you.
Thank you for kicking us off, Kristen. And before we jump into our panel, I'd like to introduce Ellen Martin, Head of Impact and Insights for the Circulate Initiative, to share some fire starter remarks to kick off our panel today.
Terrific. Thanks, Rob, and thanks, Kristen. I'm so delighted to be here to join you all and share with you the case studies as also stories from the panel today. The experience of working on these case studies has been a collaborative effort. So a shout out goes out to our co-authors, Grant Collins and Shepard Voltmer, as well as the GPAP team. I will just add to Kristen's remarks on this series of case studies that we really intend to, as Rob says, unpack how to make these investments, because it's so critically important that financial institutions and of all types that are working across different asset classes and different geographies understand that it is possible to do this, and in fact there are lots of reasons to. And we have much to learn. So the first edition covered 5 case studies, some that are analogous and opportunistic, others that have been stories that have seen the results over several years already. This new edition includes case studies that are much fresher. And so the results that we're seeing are very timely of the evolving policy landscape, and also bring in the variety of actors that are very much playing a role today. So as Kristen mentioned, case studies from India, which we'll hear from today, Indonesia, Brazil, and Kenya, as well as upstream trends, if you will. We're not seeing as much current commercial investment in that upstream space, but I think this is an area for us to say is one to watch. And in the meantime, we have lots of examples that you'll see in these case studies. With that, I'll turn it back over to Rob and this panel. Thanks so much.
Thank you, Ellen. Well, I think without further ado, I'm very excited to get into our panel discussion here. We are joined by some representatives of the case studies that we heard about teed up in this conversation, and also that are in the report that was just published. And you can find the link in the webinar chat window here. I'd like to start by engaging with Han Zhang. Han is APAC Sustainability Director, Packaging and Specialty Plastics for Dow. And we'll just go down the line here and ask you a few questions and see if we can get some dialogue going before we open it up for Q&A with the audience. So Han, you're here representing one of the world's largest material science companies. And Dow plays an influential role in the plastics value chain as well as in the recycling value chain. Can you just open up by telling us a little bit about Dow's commitments to plastic circularity and how that's informing its business strategy? And then maybe we can talk a little bit more about an example or two.
Sure. So, Rob, as you mentioned, we're one of the largest chemical companies in the world, and our ambition is to become the most innovative, customer-centric, inclusive, and sustainable material science company. And plastics provide many benefits to society, such as lightweight and food preservation. But plastic is also facing significant sustainability challenges. Lack of collection infrastructure and the low recycling rate lead to huge plastic waste issue we have today. We cannot claim ourselves a sustainable company if we don't solve the plastic waste issue. So we are committed to accelerating the circular economy by transforming the waste and closing the loop, in the meantime protecting the climate. So in a simple word, we will deliver circular economy with low carbon solutions. So specifically by 2030, we will transform plastic waste and other forms of alternative feedstocks to commercialize 3 million metric tons of circular and renewable solutions annually. And then by 2035, we will close the loop by enabling 100% of our products sold into packaging applications to be reusable or recyclable. And by 2050, we will become carbon neutral, including our scope 1, 2, and 3 emissions. So to do this, Dow will expand our business model to build the circular ecosystems, partner with others, and of course, invest into opportunities which will enable us to collect, reuse, and recycle plastic waste. So when we talk about the investment, overall, when we look at the investment opportunities, besides return on capital and other financial metrics, we're also looking for whether Dow's material science expertise can help the partners grow, and whether the investment feed into our long-term business strategy of building a circular business model, and whether it will create joint opportunities. So just a few examples. We partner with Recycle, and I'm very glad Abhay is here, and I think he will share more. So we partner with Recycle to launch one of the first digital waste management program in India, and the program digitally connected each player in the waste ecosystem. And this not only increase the amount of waste being collected, but also improve the quality of waste, which eventually will benefit companies like Dow, who is going to use waste as a feedstock to make circular products. So it's great to see that the Recycle keeps growing and receiving more investments. We recently also invested into Mr. Green Africa, the first certified B corporation recycling company in Africa. And through this investment, we will work together to address critical gaps in waste management system, enabling more plastic waste to be sorted, collected, and reused in new applications. And I also want to say our best investment so far today, Rob, probably is our investment to Circulate Capital's Ocean Fund. This investment not only provides the necessary resource for many recycling companies to grow, but also giving Dow the opportunity to lend our material science expertise to help those companies to grow fast. So those are a few examples, and I look forward to more discussion.
Yeah, thank you, Hanno. The check is in the mail, so thank you for those kind words. You mentioned you're an investor in Circulate Capital, and you've talked a little bit here about what you guys look for in your partnerships and how you are looking for companies to work with and ultimately invest in. And when we looked at launching our investments in India, one of the first companies that you and your team helped introduce us to was Abhay and Recycle. And you guys had identified them early on and worked with them in almost a philanthropic way that put them on our radar screen, and we were able to engage with Abhay directly. So maybe on that, I'll transition to you, Abhay. I'd like to welcome Abhay Deshpande, founder of Recycle, which is the company that Han and I are talking about here. Abhay, you're a serial entrepreneur. You've successfully raised capital from a variety of financial institutions. We've heard now from Han at Dow about how they think about it from a corporate strategic perspective. But let's hear about it from you from the entrepreneur side. When we first started working with you and got to know you and your company, it was very clear that India's plastic policies were driving a massive tailwind for a growing market, for a business model like yours. And a digital platform that you built has really, that can adapt to help many players in the system engage with regulation in a transparent and traceable way. I think collectively saw a tremendous opportunity there. But to what extent have other investors identified public policy or regulations, either that are in place today or how they're coming, as a key factor in understanding their opportunity to invest? Why do you think you've been successful raising capital?
Thanks, Rob. I think the whole policy has definitely played a major role into our success till date. But we feel that the policy is the enabler for the circular economy or circularity. When we started in India, we saw that this is a very informal ecosystem. There was no formal supply chain available. There was no data. And to transform from 99% informal to say 10% formal economy and to bring that circularity and traceability, the only thing would have worked is policy. Because what we have seen, at least I'm talking about the Indian market, what we have seen works is what brings change in the people is either a fear or a greed. Like these are the only two things which works majorly for a dramatic change in any business or any business opportunity. And when the policy plays that role of fear, right, that definitely bring in that suddenly the 2016 plastic waste management policy came in picture. And luckily we started our journey in 2016 itself. Although it was not planned, we were not really aware we came to know about the policy in 2018. But the policy that came in 2016 and then subsequently it got converted into a policy of EPR, that is extended producer responsibility. And I think that has really played a major role because till then the whole system in Indian context was working informally in a cash-driven economy. And due to the policy, the formalization of the industry started happening and many new recyclers came in. A lot of, they wanted to buy the products properly to the proper formal channel. And all those changes started happening because one policy change by the government bought in almost 15,000 brands. I'm talking about FMCG brands and the packaging companies who use into the waste management ecosystem, which were not there at all. Till 2017-18, none of the big brands were really involved into the waste management. They were not a part of the ecosystem. And suddenly one EPR policy, which came in 2016-17, brought everybody under it, that they were responsible for their own packaging. They have to get it back. That would not have been possible with corporate voluntary actions, right? That was only possible through a policy. And I think that has really changed the game in the plastic waste management from the country perspective, from transitioning from formal to informal. So I think when you looked at us and when we were working with Dow, the early days of our business, we were really very small those days. And when you looked at us, definitely policy, the decision you made might have made on multiple factors, but policy would have made the EPR was something which we started getting a good traction. And we saw the brand's involvement happening there in a great way. The post that, what has happened is that in the last 2 years, along with the policy, so the one policy was the EPR and then plastic waste management. In future also, if the circular economy business has to really scale and we have to achieve decent percentage of circularity in the plastic waste management, the policy is going to play a major role. Like for example, a policy for deposit return system, right? We have seen that there are 61 countries who have implemented deposit return system through a government-driven policy, and they have seen the collection ratio going to 80 to 90%. So, and at a very quality material coming out of it. So those policies coming from the government in future is going to bring more and more circularity and more material and quality material into the system. Apart from that, the corporate voluntary actions, which now are slowly getting converted into policies from the sustainability and ESG perspective. So what we saw in last 1 year, transitioning of a lot of corporates from the compliance requirement of EPR towards a voluntary action, where they feel that because of material circularity plays a major role into sustainability goals of any company. Generally, at a trend is 55% is all about energy and 45% is all about material circularity. So that 45% was the area where we work, and every corporate who is generating whether a pre-consumer or consumer post-consumer waste actually became conscious about it, and that's where all these take back programs and everything started coming in picture. And the last but not least, even the new policy which came in 2022, actually what Christian was talking about, the reuse of the material, and now they have made it mandatory that by 24-25 each brand has to use 10% of the material again as it is. That is a reuse policy, plus 20% of the recycled content to be used into their packaging. That's a mandate. Today many are doing it voluntarily, but these two changes in the policy are going to play a major role into the bringing into circularity from plastic perspective. As far as your main question concerned, investors, I think you looked at policy. Even Morgan Stanley was also looking at policy, played an important role. I feel so. The new investors which are talking to us are also looking at policy, but at the same time, policy is not the only thing which drives investment. That also was our experience. Policy is an enabler. They also look at our unit economics, is that policy is enabling us, but if the policy doesn't stay there after 5 years, but any business we build on compliance or a policy, there is a risk of policy change, and there is an inherent risk of business going down because of the policy change. So we were also cognizant from day one that this is the opportunity coming to us, but we don't need to be dependent on policy fully. We need to have build a economically viable model beyond the policy. And I think we were able to, after your investment, we were able to show that traction, that not just policy, the policy is enabling us to really make this circularity happen, and which is economically viable. Even there is a change of policy tomorrow, our business will extend and survive. So I think that's what I would like to say about what policy role has played from the investor perspective in our business.
Yeah, thank you, Abhay. I mean, the story you just told about the history of plastic waste management rules and policies and laws, regulations in India, it sounded like over the last several years, it's changed maybe half a dozen times.
Yeah, absolutely.
And one of the things I think that we probably, if we look into the future about what India's policy regime will look like in plastic waste, I think probably the only thing we can say for certain is that it will probably change again another half dozen times.
Absolutely.
So it's an interesting balance because it's created tremendous opportunity for you. But I think it's really important to note as you think about your pathway for recycle. Now we'll talk to Raja in a moment. You've noted that you've raised a significant amount of capital from Morgan Stanley, positioning recycle to be one of the leading, if not the leading, pan-India solution providers for waste management and recycling in India. And policy is such an important part of it, but it also, you mentioned, it's an important risk. And so maybe if there was a message around this for policymakers, it's how can policy bring stability to your business rather than volatility to your business? Is that a big part of your message?
Absolutely. Right.
Okay, great. Well, maybe I'll turn with that to Raja Parthasarathi, Managing Director and Co-Head of Morgan Stanley India Infrastructure. Raja, we were speaking on your behalf a little bit there. Is Abhay right? What's your experience as you conducted due diligence and decided to invest such a significant amount in recycle to back Abhay to scale up his business? How did you envision policy being a part of that assessment and deliberation? Oh, Raja, you're on mute, I think.
Okay. Thank you, Rob. Let me begin by contextualizing Morgan Stanley's role in plastic waste management. It might seem unusual for some of you on this call that Morgan Stanley is involved and is engaged in this important initiative. But in April of 2019, we made a goal to facilitate the prevention, removal, and reduction of 50 million tons of plastic waste from entering rivers, oceans, and landfills by 2030. We have had for many years now an Institute for Sustainable Investing. I believe one of the early institutions, financial institutions globally, to have that. And I think we have a deep recognition of the wider role that we need to play, given the amount of capital flows and clients and partners we work with on a daily basis around the world. Our ultimate goal, of course, is to work with clients and partners and companies to help shift the global economy to one in which the value of plastic is fully captured rather than wasted. Of the 50 million ton target that we've set ourselves by 2030, at the end of 2021, we've done 13 million tons. So we are on our way to hopefully achieving our target ahead of schedule. As a financial institution, therefore, we are always looking for ways to participate and engage in our overall sustainability goals. In the case of Recycle, we did that through an investment in the company, an equity investment in the company, but we work in other ways too. We are a leading underwriter of green bonds and green loans. We take companies public like ThreadUp, which are in the circular space. We make foundational grants to companies that are engaged in innovation and emerging technologies. So we find a number of different ways to engage with the ecosystem on furthering the plastic waste agenda. There is, of course, no single way, given the scale of India's challenges when it comes to waste management. There's no single way to address the problem. But to us, as we looked at the landscape of companies and who is doing what, it became fairly clear to us that in order to achieve transformational impact at scale, technology must play a very big part. And one of the things that really appealed to us with Abhay and the business that he and his co-founders have built is that they appreciate the role that technology can play in creating scalable solutions for plastic waste management. Coming to the point about policy that Abhay was talking about, Rob, and that you brought up, it's very important for us to find businesses that are investable on their own economics. It's great to have policy tailwinds that are favorable, but ultimately any business needs to be viable on its own 2 feet. I remember in the case of renewable energy back in 2007-8, when tariffs were as high as 16 rupees per kilowatt hour in India, subsidies were still the norm in order for people to make viable returns. Today, tariffs are at 3 rupees per kilowatt hour, and businesses are sustainable on their own 2 feet without subsidies. So it just gives you a sense for how businesses can evolve over time. But the key for us has always been, will this business, in the absence of subsidies, generate sustainable unit economics? And we believe that technology is one of those levers that allows you to do that. I agree with you, Rob, also that the only thing we can be certain of is that policy will continue to evolve in India, and that's fine. I think what we need to do as a company, as Recycle, as investors in Recycle, is to be nimble and agile, preempt where we can, respond where we can't preempt, but essentially be nimble and agile to be able to navigate what will undoubtedly be a complex environment over time.
Thank you, Raja. It's an honor to be here on this panel with you and co-invest with you and Abhay. Abhay, we're proud to be investors in your company as well. I think, Raja, you're making a really important point about how investors are operating within a policy context but it is not how investors make decisions. It's a key part of that context, but at the end of the day, it sounds like you invested in Recycle because you felt that it's a successful business that will make a lot of money, that could, through this technology platform, deliver very attractive unit economics. I think at the end of the day, that's a core part of how investors think about anything in the environmental space. Is that, it sounds like that's been part of your experience as well from the renewable energy side.
Absolutely. We like, we think government policy in India is positive. We know that whether at the center or the state, there's a lot of movement towards getting us to a better place. But at the end of the day, businesses can benefit from those tailwinds, but they ultimately have to have their own engines in the absence of tailwinds.
Yeah, I hope these perspectives are helpful to policymakers and designers, especially those who are entering the plastic treaty negotiations, to think about how the guidance that they can provide at a global level could be applied into a country like India or across the world. Well, thank you, Raja, for sharing that perspective. We may come back to you as we have time here. But our next panelist, I'm pleased to introduce Hayoung Lee, a Senior Investment Officer from the International Finance Corporation, or better known as IFC. Hayoung, great to see you. Thank you for joining us this evening. IFC has played such an important role in bringing capital across many different industries in emerging markets, and especially in plastic waste. I know this is an area that is particularly a big part of your scope, because IFC anchored the first blue loan to Indorama to finance multiple recycling of PET bottle facilities across Southeast Asia and Latin America. And we've also been very proud to accept and announce IFCs as an investor in our funds. So we have seen you and the work of your colleagues getting quite active in plastic waste recycling over the last few years. You've been doing more deals, and I think you'd like to do more. But could you give the audience today a bit of insight into how these deals get done? What is the IFC doing to address plastic pollution and ocean health? And then how are you making your investment decisions in especially the policy context that we're talking about here today?
Yes, hi Rob, and thanks for having me here. Good to see you and everyone. So IFC, this whole marine plastic issue over the very recent few years has become a key priority for us, especially in this region where Asia contributes to more than around 60% of the global marine waste. So addressing this issue through circular economy approaches is a key financing strategy for IFC. So since 2020, we've invested and mobilized over $700 million in blue finance, and recognizing the untapped potential for clients and financial institutions to grow their blue financing products and services. For example, recently we have done multiple blue bonds and blue loans with banking institutions. So BDO Unibank in Philippines, the Bank of Qingdao in China. Also, we did a blue bond by Thanachart Bank in Thailand very recently. So we've partnered with financial institutions to on-lend to this, 50, for the example of Bank of Qingdao, around 50 players in the blue space to reduce marine plastic pollution. But not only that, as you mentioned earlier, we also very active in the real sector as well. The Indorama Ventures investment that we did in 2020, this $300 million first ever real sector blue loan, was to support Indorama Ventures, which is the largest resin producer, PET resin producer in the world, and also one of the largest recycled PET players. to support the company to reach its ambitious goal of recycling 50 billion PET bottles per year by 2025. So that this financing was to help support its brownfield and greenfield expansion, recycled PET expansion projects in Thailand, Indonesia, India, Philippines, and Brazil. So we're hoping that this, this was a large project in the whole blue space for a single transaction. We hope that this can signal to other investors that these larger projects can also be bankable and successful, not only just small projects. In regards to policy, so IFC, with our World Bank colleagues, we've been providing thought leadership through, first of its kind analytics to drive policies and investments in this, early stage space. So this includes the market studies we've done jointly for Thailand, Malaysia, Vietnam, and Philippines to understand plastic circularity barriers and opportunities, but also to develop policy recommendations. So we've supported the World Bank's work at the individual country and the regional level. For example, for both national and ASEAN action plans to combat marine plastics, but from a private sector perspective. And building on these policy work to date, we're further developing innovative financial instruments like the blue loan and the blue bonds, but also recently we've developed the guidelines for blue finance. This was launched earlier this year as we realized that there was a gap in the market of identifying which eligible assets could be considered blue under the overall green bond and the green loan principles in line with the SDGs. So this guideline is a living document. I think it will evolve as newer technologies, product types, and location-specific blue activities come up. But we now use these guidelines for investments, and we hope that this will be useful for other players in the market as they grow their blue financing and blue activities. And we also hope that this guidelines were helpful for the regulators, policymakers who are developing green taxonomies.
Great. Thank you for sharing that. Hyung, you've been scoping waste and recycling opportunities across South and Southeast Asia for years. What are some of the biggest challenges you face and biggest opportunities you see moving forward? Where do you need help, and how do we get more capital into the space? Like the deals that are featured in the report being released today.
Yes. So yeah, there's obviously definitely challenges and opportunities. Challenges, I think a lot of you would agree, is one of the biggest challenges that we see is the availability of feedstock, the secure availability of good feedstock that is traceable. If you look at the virgin plastic sector, it's supplied by these multi-billion-dollar crackers, petrochemical facilities, single unit capacity of hundreds of thousands of tons per year. Whereas the recycling companies, or even the biodegradable companies, or chemical recycling capacities are usually at large 30,000 tons per year, right? So virgin compared to recycled feedstock, the capacities, the economies of scale are very different, and that's not including the whole waste collection and sorting issues. So feedstock is the biggest challenge that we see, and that the recyclers that we talk to are having at the moment. But this is not something that can be done just out of the blue, right? There's no magic wand to solve this. It has to be done by the off-takers, the large companies like Dow, the FMCGs, the policymakers, the consumer awareness, and of course the financiers as well. Because we need a secure feedstock. and also of course offtake. But the feedstock supply, that's the most critical challenge that I see. But the opportunities are enormous. The market study that we did for the 4 countries last year with the World Bank, there were according to their study, there's about $9 billion of plastic that's been discarded and just lost from just these 4 countries. So $9 billion of worth of plastic that's gone. So if you widen the countries, there's tens of billions of dollars that's being discarded and not being treated or reused or recycled. I think that just points to the enormous opportunities that's out there right now.
Great, thank you. I was going to thank you for that, Hyung. I think we were going to plan to round out the panel by bringing Kristen back, but I believe we might have had some technical difficulties. So maybe Ellen, did you want to come back on and share a few final comments here before we open it up for questions?
No, but I'm happy to join the Q&A, and this has been really great to hear from folks. So let's go for it. We have a number of questions that have come in. Maybe you want to start with some of these.
Great. Well, we've been watching some of these questions come in for our panel here. Han, there are a number of them for you, but there's a topic here that I think actually some of the others on the panel will be interested to talk about, which is chemical recycling or advanced recycling technologies. And so the question here is, this idea of depolymerizing plastic using chemical processes to deal with the hardest to recycle plastics and even ocean plastic. And so the question, Han, for you first is, to what extent is Dow investing in these technologies? And what do you see as the outlook for commercial investments at scale for this sector? And then I know, Hyung, you've looked at a lot of these deals too, so maybe you can share some thoughts building on what Han has to say. Han?
Yeah, so definitely chemical recycling, or we call it advanced recycling, is a very important solution if we want to achieve a circular economy. As I mentioned earlier, we have a commitment to transform the waste and commercialize 3 million metric tons of circular solutions. We cannot achieve that without chemical recycling. And to enable circular chemical recycling, significant investments are needed to scale it up. And the chemical recycling, those are high return, but also high risk investment. Because we are dealing with new technology, sometimes unproven technology. But these are also very good opportunities for Dow because our expertise can significantly de-risk technology. And also in the meantime, our commercial strengths can help meet the rising demand in circular solution. So on one side, we can help to de-risk the risk. On the other side, we can help create like an offtake agreement or market demand to generate those marketing pool for circular polymers. So recently we entered a partnership with and also invest in several startups to develop and scale up advanced recycling. For example, our partnership with Mura Technology, which could deliver as much as 600 KT, 1,000 metric ton of advanced recycling capacity by 2030. And I would also say this could even create an interesting opportunity for partnership between companies like Dow and large institutional investors to co-invest into this opportunity. One side, again, we can provide the technology, we can provide the market demand, and if we work together and provide the investment, we can accelerate the development of chemical recycling much faster.
Mm-hmm. Thank you for that. Hyung, as I mentioned, I know you've looked at chemical recycling a lot in the region. Does that resonate with you, what Han said? Anything you'd want to add?
No, definitely. If a company like Dow is investing in chemical recycling, that, I mean, from a financial standpoint, it will be very assuring. For from what I have seen in the region is, especially in the emerging markets, emerging countries in Asia, is chemical recycling. The technology developers are usually based in Europe or the US, in the developed countries, but they see the feedstock opportunities in Southeast Asia. But when they come here, they see the feedstock supply is quite fragmented and not organized as they expected. So the feedstock availability does become an issue, and I think that is the hurdle to really set up shop and run a plant here. But that said, I think if there are any technologies that can be replicated from Europe or the US to Southeast Asia, and a small plant can get up and running with secure feedstock supplies, I think Rob, Circulate Capital could be, I hope, invest in those companies, and once they grow to a certain size and a different growth stage where we can invest, I think that would be the perfect sort of solution to grow the sector.
Yeah, thank you. Let's jump back to India. Abhay, we've got a question here about acknowledging that recycling capacity is still much lower in India than the quantity of plastic waste that's actually generated every year. And so the question is, you're working with many recyclers across India. How do you see collections capacity scaling up? And how does technology solutions like what Recycle's doing of connecting waste generators with waste buyers or recyclers, how can these types of technology solutions help drive collections?
Yeah, I think what we did at Recycle is, as we work with almost 100+ recyclers and channelizing around 50,000 metric tons of almost plastic every month to the right destination, to the recyclers. So I think recycling capacity definitely has grown in last couple of years, and thanks to Circulate and many other investors who are looking at that space seriously. And there is a lot of interest in that space because of the circularity and the sustainability focus everywhere. So I think that capacity is almost growing 20-30% year on year, and I'm sure next 10 years we'll see that growth happening. Now the biggest challenge in the country is that the supply of the material, and I think that's very, very fragmented, very, very distributed, and the whole ecosystem, the informality of the sector is a challenge there. But thanks to internet, what has happened in India in last 15 years, that internet has really gone to a grassroots level. So I can tell you that even the rack picker who earns just $5 a day or $6 a day has a smartphone, and good number, 60% of the people, and they have internet connection thanks to Jio or Reliance, where it's available for monthly $4 or $5. You have a full internet package available. So I think that has made everything accessible, and people actually started using internet for their personal use, and now they realize that the business also can be done on this. So what has happened is that, and as I said initially, there are two things which made the change: is either fear or a greed. So fear from the policy perspective, but the greed was for this informal sector to really, what do I get extra if I adopt technology, if I start selling using the technology platform which Recycle or has built. So what has played a major role is that it took time for us to really build confidence amongst them, because they take time to build trust on the brand. And that trust got built, and now all these informal aggregators, collectors started really listing their products because they found better price for their product, multiple option to sell the products to, and most importantly, transparency and quite a connect to the market, and formalizing what we thought that all the transaction on our platform happens with the proper GST payments and everything. That's something new for that space. So the supply started getting formalized, a lot of buyers, and this has a network effect. What I have seen in particularly waste management is that if there are 50 aggregators happy on my platform, getting 500, I don't need to put efforts. That happens with the network effect. And we are seeing that effect in last couple of months or quarters that the growth business is growing almost 30-40% month on month, but the major growth is coming from the network effect where the people are signing up. So there is more supply getting available here, more demand side also. We have more and more recycler, and the market decide. The matchmaking happens on our platform. We just play a role of technology enabler in between. So and we don't really trade there. So I think that brought that comfort, confidence, timely payments to them. So these people who were working for last couple of years or for a couple of decades in the space, who was doing 100-200 metric ton per month, because of our intervention, they started putting more effort to collect 300 metric ton, because they were confident about the payment cycles, the rotation of the money, and the selling capabilities. So they know that every day they come in and log in our application, they say there is 1,000 metric ton required. So there's no dearth of demand. Only there was a supply challenge. Always that was a challenge. So I think that formalization has started happening a bit. As I always say, this industry was 99% informal around 4 years back, 5 years before the EPR regulation and the policy came in. Today, I will say that 97% is informal, 3% has become formal, and this journey is like will move forward. So I think we could bring that the technology which we bought in actually brought more transparency, more traceability, more options for the buyer and seller, and better economical value, and that made actually the adoption happen and feel that supply demand supply gap to some extent.
Yeah, great. Well, I think we'll keep moving through the question list here from the audience, see how many we can get to. We've got just about 10 minutes left. Raja, at the beginning of this webinar, Kristen talked about some of the dialogue that was at the Global Plastic Treaty negotiations in Uruguay last week. And she talked about how recycling was a part of the conversation, but also upstream and other types of solutions were a big part of the conversation as well. And in the Q&A here, refill and reuse models have been mentioned as questions around it, and bio-based materials. These are things we're looking at Circulate Capital as well. And I'm wondering if Morgan Stanley and if your team, you've looked at some of these alternative options for preventing plastic pollution, like refill and reuse, that would reduce the need for single-use plastic, and what some of the considerations for investors are with those models.
We haven't as yet, Rob, but it's something that we will be doing. Part of the challenge for waste, the sector as a whole in India, has been the scarcity of equity capital available to entrepreneurs who have great ideas and want to build businesses. And I think one of the roles we see for ourselves is as a catalyst for channeling more capital towards good businesses led by good entrepreneurs. There has been a lot of hesitation today. A lot of people have sat on the sidelines saying, look, waste is a big issue in India. Why can't we find investable businesses? But for one reason or another, a whole lot of capital hasn't come into the sector. We know for a fact that over the last 10 months since our investment in Circulate, and since yours, Rob, in the company as well, and other investments you made in India, the level of awareness with respect to the sector and the opportunities have been heightened. And I'm encouraged that will lead to more capital coming in. I think at this point in time, people are reluctant to put capital to work in emerging technologies, and I think that's an evolution or a growth curve. I think initially the businesses that will get funded will be businesses that have things that people can touch and feel and can relate to more easily, that are more, I would call, middle of the road. And then once that people start getting comfortable with the sector, you might start seeing capital coming towards some of the emerging technologies within plastics. So short, in summary, it's not something we're actively looking at just yet, but we think the time might be right to start doing that fairly soon.
Great, thank you.
If I could just jump in really quick on that one. I think one of the things that we saw in the case studies, there's one specifically on reuse and refill. I'll just mention that there is data that's showing that there is money going into refill and reuse, but not in emerging markets as much. So I think as we think about the focus of this conversation, it's also a matter of the entrepreneurial ecosystems that are being developed around solutions and the opportunities that investors are seeing in the overall landscape. Sorry, Rob, go ahead.
Thank you. Why do you think that is?
I think that it's a little bit has to do also with policy. So one of the things that we highlight in the case study on refill and reuse is interest from the EU to set targets around if a package is not recyclable or compostable, it has to be reusable. This is a newer evolution, and that's led to a couple of startups that have been notable in terms of getting investment in those markets. And likewise, I think there is more activity like they have in the United States that's been driven a lot by some of this interest as well.
Okay. Well, maybe I'll stick with you, Ellen, for a sec, and then Hayoung, I may have you build on this question as well. There was one question from the audience here about informal workers. And we heard a lot from Abe in his description of what's happening in India around the informality of the sector. I think that's true across many emerging markets. They're obviously critical for the recovery of plastic waste, but I'm curious how you're thinking investors and financial stakeholders should address the risks regarding informal waste pickers who are playing such a key role in sourcing plastics for recycling. And after your comments, Hayoung, I'll turn to you because I know this is such an important topic for IFC as well.
Yeah, absolutely. So agree with Abe, certainly that there are many opportunities and ways of engaging the informal sector. I think in particular in India, we see a number of examples like that. For mainstream financial institutions that are looking at this sector, it's perhaps a new way of thinking about the either the customer base or your source of feedstock, right? So the risks are a little bit to understand the social side of things, the human rights issues, certainly an informal sector, and also to bring transparency to that. And the more that investors can understand what has been learned in other sectors where there is informal work that's happening, whether that's in agriculture or other areas, that's certainly one way that investors have gotten around the issue. And I think this issue will continue to evolve, especially as policy evolves with the Plastics Treaty, because there is so much attention happening right now on the role of informal workers and how the treaty needs to be inclusive of their considerations.
Thank you. Hayoung, how are you thinking about that, the topic of the informal sector?
Yes, I mean, from our perspective, traceability, transparency of the supply chain is key. Just to put it, I mean, straight, if it's not traceable and transparent, we would not be able to finance a project. And let me just put it that way. It's very, very important. So the solutions, right? I mean, like the digital solutions, the tracking solutions that we have that are now being implemented, I think are a very good way to ensure that the recycled plastic, post-consumer plastic is traced and can be tracked. And this ensures also, fair payment made to the collectors. And it would help also with the off-takers as well, because the FMCGs, the global chemical companies, would also require the traceability and the transparency. So it's an essential part for us to have that implemented in any project.
Great. Well, I think we're running out of time. I really appreciate all of our panelists. Thank you all for joining us today. Thank you to the Global Plastic Action Partnership and Circulate Initiative for hosting us today. This was a quite robust conversation. We heard a variety of different perspectives that are really relevant, I think, for how the negotiations are going on for the Global Plastic Treaty, but also every day across the world, there are policymakers and investors thinking about how plastic waste is affecting their business and their policies and how they can really drive change. And I think we heard some really interesting insights about what's working and what's not today on this panel, from ambitious goals being set by Dow and Morgan Stanley, as well as IFC driving a lot of their activities. We also heard about how the risk of policy is such an enabler, but also a risk driver, and how do we drive more stability in the policy enabling. Raja talked a lot about sustainable unit economics being such a critical part of how we'll unlock more financing in the space. And I think we heard about some of these other areas around feedstocks scarcity and feedstock surety. We heard about, at the end here, the importance of traceability and transparency to mitigate all the risks that are holding back a lot of the capital that could be flowing into the sector. So thank you so much for your time and engagement today with the panel. Thank you to the audience for the questions. And I wish you the best of the rest of your morning, afternoon, and evening. Thank you very much.
Thank you.
Thanks, everyone.